Welcome to another episode of Mortgage Masterminds. I'm your host, Richard Greaser, VP of Marketing at Sales Boomerang, and my guest is Eric Hoffner, President at StrongBox Home Loans. Welcome, Eric.
Hey, Richard. How you doing?
I'm doing good today. In case you did, just quick preamble, in case you don't know who we are at Sales Boomerang or you've been living under a rock since 2017, Sales Boomerang notifies lenders the moment one of their borrowers needs a loan. Foundation of every successful lender is borrower retention. Sales Boomerang is the number one fully automated borrower retention system in the industry, and 1 in 2 of the biggest lending companies in the US are using Sales Boomerang to make sure they reach out to their borrowers when they need a loan, often before they know they need a loan. That's just what we do. So if you want to learn more about Sales Boomerang, check us out. Go to salesboomerang.com, schedule a demo. We can get one of our experts on and talk to you. So without further ado, Eric, let's jump into it. Great to have you on.
Thank you, Richard.
Look, I had a really good conversation with you. There's not a lot of folks in your side of the business that I've interviewed so far. So glad to have your perspective. So let's kick it off here. You got a ton of great experience, and we'll get into that. But to start with, why don't you tell us a little bit about you, what you do, and how you got into it?
Yeah, so my name is Eric Hoffner, president and a founder of StrongBox Home Loans here in Alpharetta, Georgia. We have a small brokerage with a handful of originators, a couple of support people. I worked for Chase for predominantly my entire career for more than 20 years. Went to a smaller bank, got laid off, got laid off due to a bank merger, and then I decided to open my own company. It was one of the best decisions I ever made. I'm really enjoying the broker model for sure.
That's cool. Well, so why don't you talk about that for a second? Like, what's the current status of the industry from a broker's perspective? You know, you told me a little bit about what happened after Thanksgiving that year. I think everybody's going to kind of be speaking the same language.
95% of our business is A-paper, traditional, easy, Fannie, Freddie, FHA, VA. We had 2 of the most amazing years we've ever had, and then all of a sudden after Thanksgiving, I felt like someone disconnected my phone. I mean, nothing, zero. No emails, no phone calls, no inquiries. I reached out to some of my agents, and almost across the board, they said, hey, listen, Eric, we made a bunch of money this year. The market sucks. There's no inventory. It's so hard to get under contract. I'm going to spend some time with my family. I'll see you in January. And then January was pretty quiet first couple of weeks. And then all of a sudden, the phone started to ring, but every deal had hair on it. I'm actually happy that we have a full pipeline right now. We're doing a lot of business because all over the news are talking about that applications are the lowest they've been since 2019, 2017. But just about every loan in my pipeline is not easy and is having to be massaged and worked.
Well, Eric, why don't you tell me a little bit? Like, what does some of that hair look like?
Well, we have been marketing ourselves as one of the advantages of being a broker is that we do all of the easy loans, Fannie, Freddie, FHA, VA, jumbo, but we have no bank overlays. So as you know, if you underwrite your own loans, some of those lenders, a lot of them, add guidelines on top of their guidelines. And as a result, there are some loans that we can do that others can't. And so if they fell out somewhere else at another lending institution, they send them to us. Combination of our expertise and our experience and our knowledge base of the entire book of guidelines, we're able to get some things done in addition with the fact that we have no overlays. So those deals that have been declined somewhere else, they send them to us, and they're kind of these 50-50 toss-ups. Will the underwriter buy into what I'm trying to sell? And in addition to that, we also lead when we talk to our realtors, referral sources, builders, financial planners, that we can do loans for self-employed borrowers that don't have any income, or maybe they have less than perfect credit, or all different types of things, non-warrantable condos. And so as a result, I've asked for these difficult loans, and you sometimes get what you ask for. And we got a bunch of it, and 80 to 90% of it goes real well, and then 5 to 10% of it doesn't go as planned, or you have a borrower that misleads you either intentionally or unintentionally, and then you find yourself scrambling around to satisfy your referral source.
Yeah. Well, so a 2-part question, like what percentage of your business is non-QM, and of those non-QMs, do you think that it makes getting the deal closed harder in the current market where there's limited inventory and a lot of cash buyers are showing up to close?
I think January was so slow that it kind of opened the door for some of these deals. Um, Most of my business is A paper. I would say right now, about 30% of my business is non-QM just because January was a funny month and we would take whatever we can get. When the pipeline's full, I'm less likely to take a bunch of troubled loans because it jeopardizes the health of the entire pipeline. But when you got nothing in the pipeline, you take what you can get. And I accumulated a good share of really, really hard loans. Of those really, really hard loans, about 75% of them go the way that they should. But if you have 2 or 3 loans going sideways and potentially a non-QM lender who's not being very cooperative, it wears on you emotionally. It makes it harder to sleep at night, takes away from your ability to prospect, impacts your ability to go after the next deal or follow up. And then something that's unusual that's happening right now, or part of the problem of non-QM loans, and between you and I believe in non-QM loans. I've bought into it. It's going to be a part of my business plan. We're getting better at it every day, but we're at the mercy of these lenders. These lenders are not like Fannie Freddie. Fannie Freddie's Fannie Freddie no matter where you go, right? We all know what Fannie Freddie FHA is looking for. With these non-QM loans, you kind of know what they're looking for, but they're each individually hedge funds. So some of them are keeping loans for themselves, some of them are selling them, some are part of the food chain, some have the ability to make bigger exceptions than others, and we've seen this market capitulate. So for example, during COVID, a lot of these non-QM lenders just went away. They just shut down. Then they fired 75% of their staff, and when they came back, they were different companies. I know that when the market was doing great and values were going up, the loan to values were getting more aggressive, the credit scores were getting more aggressive, the ability to make exceptions was easier. It was an easier business. Now, because of what's going on in the Fed and what's going on in Russia, the investors are nervous, the appetite is weaker, and the exceptions are a lot harder to come by. And it feels like it's a different business than it was, let's say, October of last year.
Yeah. So anybody who's listening to this right now, the news headlines today is that Russia just invaded Ukraine, right? So that just happened today. So that's why he's saying that right now. So all right, well, let's talk a little bit about your growth plans, right? Like, how do you want to? What's your plans for growth? Do you think you can do more business than you did last year? That kind of thing, or maybe before COVID. Like, what does your growth plans look like for this year?
Well, according to the National Association of Realtors and Fannie Freddie, some of them are predicting the pie to be 25% smaller than last year, some as much as 50% of what we did last year. So I feel like if I can do what I did last year, I think that's a huge win. It was an enormous year for a lot of us. We did a lot of refis, but if I can keep that same amount of volume this year, I would be very happy. The growth for my company is going to come from loan officers. So my goal, I have 4 loan officers right now. I've got another one that's being licensed as we speak. And I hope to hire 3 more throughout the year. I think the broker model is going to grow. I think the banks are going to struggle. I think the large mortgage companies are going to struggle. And I think you're going to see some movement in the marketplace, and we hope to capture some of that.
Well, that's awesome. I love that. You got a plan, you're working it. So I have to ask this. When we were talking originally pre-show, you were talking about UWM a lot and throwing out a lot of love for them. And from the brokers I speak with, I hear, I'm Geneva. So I would just like to hear from your perspective why you like UWM so much,
We started in 2017, and there seems to be like the Crips and the Bloods. Either you're on the UWM side or you're on the Quicken side, and some people think what UWM is doing is anti-competition. I don't really care. I buy into UWM. I love the culture. I love the technology. I love the speed. I don't need to have the top three best pricing on the price sheet. They have a very competitive rate. I couldn't be happier with UWM. My account executive is responsive. I have complete control over my LEs and CDs. I can submit partial conditions. I mean, it's so good, I don't really want to tell other people, because I don't want to compete with them. If I'm going head to head with anybody but a broker, I win every time.
Yep, I love it. And so you'd tell other folks basically the reason that you liked UWM is you were saying to me was service. Like service was a huge one. If you needed to get on the phone with them, they were like, yes, Mr. Hoffner, what can I do for you?
Yeah, it's not only service, but it's control. It's knowing what to expect. And they're like the McDonald's of mortgage. It's the same every time. The underwriting is consistent. The timelines are consistent. What I like about them is they measure you. So when I worked at Chase, it was a very corporate environment, and they would incentivize us for certain behaviors: customer satisfaction, underwriting touches, file quality. And United Wholesale Mortgage will bonus your behavior with, in essence, what I call Sky Miles. They give you points. Points goes towards closing gifts, goes towards free extensions, goes towards underwriting rushes, and they reward your behavior. The other thing that they do is they measure your file quality, and if you're in the top tier of file quality, your underwriting is 2 hours. I submitted a loan the other night at 5 o'clock, and by 7 p.m. it was approved. That allows me to provide good service to my clients and to be more aggressive on these contracts in this head-to-head world where you have to have very short financing contingencies. So the better my quality, the better my turn times are. You were talking about consistency. Every single time an underwriter touches your file, they call you. And they say, hello, Mr. Hoffner, how was your weekend? Great, thank you. Just want to say thank you for submitting a great file. There was only 3 conditions. Would you like to talk about those? No, thank you, I'm good. Is there anything else I can do for you, Mr. Hoffner? No, I'm good. Okay, Mr. Hoffner, have a great weekend. Every single time. Where other companies, I got to play phone tag. They don't want to talk to me. They don't want to be challenged. And, sometimes we know the underwriting guidelines better than they do.
Wow, that's a real problem. Have you used a lot of anybody else besides UWM before? I mean, have you had experiences that have shown you like why this comparison is better?
Yeah, so our company's young. I worked at Chase for most of my career, so I've only been a broker since 2017. In the beginning, I did try a lot of different lenders. I used Optimal Blue, and I tried to find the lenders with the best price, and it just felt like that they failed me frequently. A lot of human beings, a lot of physical paperwork, turn times were higher, and slowly but surely I eliminated a lot of those lenders. I use UWM, and then I have a couple of lenders that I use for low credit scores and FHA loans, and then I predominantly do most of my other business with nonqm. The reason why I use UWM all the time is because I know what I got. I know I can deliver for my client, and I'm just not willing to risk a referral source on getting an 8th veteran rate in some lender that I'm not familiar with that has the potential of making me look silly.
Hey, I think that's a very clear message to the world out there, right? You got to earn their business from your brokers, right? You got to earn it, and because your business is on the line.
I just signed up with another lender this weekend because one of my guys wants to do construction of perm loans. It's work. And you can't really do it during the week because you're focusing on your own business. And if you're not focusing on your pipeline, you're focusing on marketing. And there's always something to do. The last thing you want to do is take 45 minutes out of your day to do another lender package.
Yeah, totally. Well, look, if you're looking to recruit loan officers, let me give you a platform right now. What message would you want to throw out there on why they should join StrongBox?
Sure. So we're looking for happy, positive people. We have a company culture where we don't want any drama. We all support each other. We have a better than average comp plan with a 401k match. They have access to several 20-year veterans who can help them build their business, give them advice, save them the trouble, stay out of the potholes. But really what you're buying is me and my 25 years in the business. And I built a business once, gave up my production in 2011 to be a manager over at Chase, and didn't originate for 7 years. And after 7 years of not originating, built up a business that was better than the first business. And so if you just do what we tell you to do, undoubtedly you're going to be successful.
Well, I think we can wrap it up now. How do you want people to connect with you? If Eric, if people want to reach out to you, maybe it's a loan officer that wants to work with you, maybe it's a lender who's trying to earn your business, how should they reach out to you?
They can find me at Instagram, Twitter, Facebook, or LinkedIn at Eric Hoffner. We're also at www.strongboxhomeloans.com. We're available on all the search engines, and we're easy to find.
Fantastic. Well, Eric, thanks so much for joining the show, man. That was a great discussion. I really appreciate having you on.
Thank you very much.
Thanks for listening. If you like the podcast, please give us a 5-star rating, subscribe, and tell all your friends about the show. We at Sales Boomerang started this podcast to elevate the mortgage lending industry by sharing the kind of exclusive, insider knowledge from the successes and failures of the best of the best. The foundation of every successful lender is borrower retention. Sales Boomerang is the #1 fully automated borrower retention system in the industry. 1 in 2 of the biggest lending companies in the United States use Sales Boomerang to make sure they reach out to their borrowers when they need a loan, and more importantly, before their competitors do. If you want to learn more about Sales Boomerang, check us out at salesboomerang.com.